The Central Bank of the Islamic Republic of Iran is the Central Bank of Iran. It is entirely government-owned. Among its major purposes are maintenance of the value of the national currency, balance of payments, as well as facilitating trade transactions and contributing to the economic advancement of the country. The central bank is in charge of laying and implementing monetary and credit policies of the country. The importation of goods, issuance of documentary credits and registration of orders for documentary bills of exchange for imports are also done in accordance with the policies of the central bank. It is a member central bank of the Asian Clearing Union. History. During the Achaemenid era, trade boomed and subsequently banking operation expanded to an extent that Iranians managed to learn the banking method from the people of Babylon. The first attempt at introducing paper currency in Iran occurred during the Mongol Ilkhanate of the 13th century CE. The innovation, developed in Song dynasty China, did not take hold in Iran, and paper currency did not return to Iran in any significant manner for several centuries. Modern era. In modern banking, the British first opened the Imperial Bank of Persia in 1889, with offices in all major cities of Persia and India. It was established in 1885 with a concession from the government of Persia to Baron Julius de Ruyter, under a royal charter from Queen Victoria. To compete with the British Bank, Imperial Russia also opened the Russian Loan and Development Bank. The first state-owned Iranian bank, Bank Melli Iran, was established in 1927 by the government of Iran. The bank's primary objective was to facilitate government's financial transactions and to print and distribute the Iranian currency. For more than 33 years, Bank Melli Iran was acting as the Central Bank of Iran with the responsibility to maintain the value of Iranian rial. In August 1960, the Iranian government established the Central Bank of Iran and separated all central banking responsibilities from Bank Melli Iran and assigned it to the newly formed Central Bank. The Central Bank of Iran was renamed to the Central Bank of the Islamic Republic of Iran immediately after the Islamic Revolution in 1979 and the overthrow of the Shah of Iran. Scope and responsibilities of the Central Bank of the Islamic Republic of Iran have been defined in the monetary and banking law of Iran. Iran's banking system adhered to the new Islamic rules that prohibit earning or paying interest. CBI maintains a museum of historic and ancient jewelry owned and used by the ex-kings of Persia. This museum houses the imperial crown jewels and is one of the most appealing tourist attractions in Iran. Money and Credit Council. The Money and Credit Council is the highest banking policy-making body of Bank Markazi. Its permanent members include the CBI Governor, the Finance and Economy Minister, two ministers chosen by the Cabinet, the head of the Chamber of Commerce, the General Prosecutor and two lawmakers. Each year, after approval of the government's annual budget, the CBI presents a detailed monetary and credit policy to the MCC for approval. Thereafter, major elements of these policies are incorporated in the 5-year Economic Development Plan. MCC meets every 3 months. The Iranian Central Bank needs more independence from the government in order to combat inflation. According to the country's Parliament Research Center, as of 2010, Iran's central bank is not able to conduct a proactive monetary policy and has no control over the government's fiscal policy. General Assembly. The current combination of the central bank's board of directors are the president, economy and commerce ministers, deputy president for strategic planning, and a minister selected by the cabinet. Reform proposal. 7 economists with at least 15 years of work experience were to become members of the General Assembly according to a new law proposed by the Majlis in 2010, thus moving this body from being state-dominated to one where the private sector has greater say in the decision-making process. Tenure of each member would be for 10 years and only for 1 term. Then President Mahmoud Ahmadinejad critiqued this proposal and said that it is important for the Central Bank of Iran not to fall under private control, because it would not benefit the Iranian people over the long run. Governors of the Central Bank of Iran. The President of Iran proposes a person as the governor of CBI, who must be verified by the General Assembly and appointed as per a presidential decree. The governors of Central Bank of Iran are as follows. Objectives and functions. The objectives of the Central Bank of the Islamic Republic of Iran as per its charter and according to Section 10 of the Monetary and Banking Law of Iran are as follows. Maintaining the value of national currency, maintaining the equilibrium in the balance of payments, facilitating trade-related financial transactions, improving the economic growth potential of the country. To achieve the objectives as stated in the MBAI, CBI is endowed with the responsibility of fulfilling the following functions: issuance of notes and coins, supervision of banks and credit institutions, formulation and regulation of foreign exchange policies and transactions, regulation on gold transactions, formulation and regulation on transactions and inflow/outflow of domestic currency. Islamic banking. After the Islamic Revolution, the central bank was mandated to establish an Islamic banking law. In 1983, the Islamic banking law of Iran was passed by Majlis. This law describes and authorizes an Iranian Shiite version of Islamic commercial laws. According to this law, Iranian banks can only engage in interest-free Islamic transactions. These are commercial transactions that involve exchange of goods and services in return for a share of the provisional profit, called mubadala. In practice, Iran uses what are officially termed provisional interest rates, as rates paid to depositors or received from borrowers should reflect the profits or losses of a business. Under these rules, deposit rates, known as dividends, are in theory related to a bank's profitability. In reality, however, these dividends have become fixed rates of return. Depositors have never lost their savings because of losses made by the banks and almost never received returns larger than the provisional ex-ante profit rates. Interest charged on loans is presented as fees, or a share of corporate profits. All such transactions are performed through Islamic contracts, such as Mozaraba, Forashazati, Joala, Salaf, and Gazo-Larsenaire. Details of these contracts and related practices are outlined in the Iranian interest-free banking law and its guidelines. Gazo-Larsenaire, an interest-free, non-profit, loan extended by a bank to a real or legal person for a definite period of time. Joala, the undertaking by one party to pay a specified money to another party in return for rendering a specified service in accordance with the terms of the contract. The party rendering the service shall be called amal. Mosakit, a contract between the owner of an orchard or garden with another party for the purpose of gathering the harvest of the orchard or garden and dividing it, in a specified ratio, between the two parties. The harvest can be fruit, leaves, flowers, etc., of the plants in the orchard or garden. Mozara, a contract where the bank turns over a specified plot of land for a specified period of time to another party for the purpose of farming the land, and dividing the harvest between the two parties at a specified ratio. Mozaraba, a contract wherein the bank undertakes to provide the cash capital, another party undertakes to use the capital for commercial purposes and divide the profit at a specified ratio between the two parties at the end of the term of the contract. Sharia-compliant assets has reached about $400 billion throughout the world, according to Standard & Poor's ratings services, and the potential market is $4 trillion. Iran, Saudi Arabia and Malaysia are at the top with the biggest Sharia-compliant assets. According to the IMF, Islamic banking forbids pure monetary speculation and stresses that deals should be based on real economic activity and therefore poses less risk than conventional banking to the stability of financial systems. Criticism. Critics believe that the Iranian interest-free banking law has simply created the context for legitimizing usury or riba. In reality, all banks are charging their borrowers a fixed preset amount at a rate of interest that is approved by the central bank at least once a year. No goods or services are exchanged as part of these contracts, and banks rarely assume any commercial risk. High-value collateral items such as real estate, commercial paper, bank guarantees and machinery eliminate any risk of loss. In case of defaults or bankruptcies, the principal amount, the expected interest and the late fees are collected through possession and/or sale of secured collaterals. Credit agency. Iran does not have any special credit rating institute for customers' credibility rating, but all Iranian banks are obligated to send statistics of bounced check to Central Bank of Iran. However, follow-up on bounced checks are a difficult task. In 2010, Iran Credit Rating Consulting Company became Iran's first credit agency by decree of the CBI. Payment systems. In 2005, the government obliged the Central Bank of Iran and the Iranian banks, mostly state-owned, to set up all the necessary infrastructures for fully launching e-money in Iran by March 2005. While this plan has not yet fully materialized, local debit cards are now commonplace and have removed the main obstacle to the growth of e-commerce as well as the full rollout of e-government initiatives. Iran remains largely a cash-based economy. The central bank has developed the real-time gross settlement system as the main center for settlement of Iranian banks' transactions in rial. Upon implementation of the first and second phases of this system in 2006-07, real-time settlement through the Interbank Information Transfer Network and Interbank Clearinghouse was started in the review year. Since 2007-08, bank-to-bank and customer-to-customer payments were also settled through SATNA. The Retail Funds Transfer System, launched in 2006-07 for real-time transfer of a large volume of payments of relatively small value, was further developed in 2007-08. Moreover, there are further plans to connect Iran's SHETAB to information transfer networks of other countries. In 2011, 2 new payment systems were launched. SCRIP Plus Securities Settlement System as the electronic infrastructure for placement and settlement of various securities, including governmental and CBI participation papers. The launching of the automated clearinghouse system for processing individual and multiple payment orders. Connection of Iran's interbank information transfer network to other ATM and POS switch systems for the acceptance of international bank cards. Designing of the electronic card payment system for the centralization and reorganization of POS checks. As of January 21, 2010, account holders will no longer be allowed to withdraw more than $15,000 from Iranian banks, but they can still write checks for larger amounts. The government wants people to use bank checks and electronic banking systems instead of cash transactions. 10.7% of checks written in 2009 bounced. Debit credit cards in 2007. Tetra Tech IT company announced that using Visa and MasterCard is now possible for online sales and in Iranian e-card terminals at shopping malls, hotels, restaurants, and travel agencies for Iranians and foreign tourists. Iran's electronic commerce will reach 10 trillion rials by March 2009. As of 2015, Iranian consumers have very little debt. Some wealthier people have debit cards, but there is no MasterCard, Visa or American Express in Iran, and few foreign banks are active there because of international sanctions. Around 94% of Iranians had a debit card, compared with less than 20% in Egypt. Hawala. Many Iranian businesses and individuals also rely on Hawala, an informal, trust-based money transfer system that exists in the Middle East and other Muslim countries. Since the imposition of recent U.S. and UN financial sanctions on Iran, the use of Hawala by Iranians reportedly has increased. Anti-money laundering law. The Central Bank of Iran is enforcing the newly passed anti-money laundering law to curb possible crime. The Minister of Intelligence, the Governor of the Central Bank of Iran and several other ministers are among the members of the special committee in charge of the campaign against money laundering. In 2008, the Paris-based Financial Action Task Force watchdog praised the Islamic Republic's crackdown on money laundering. The 34-member financial watchdog congratulated Tehran on its commitment to seal money laundering loopholes. However, in 2010, FATF named Ecuador and Iran on a list of states that it says of failing to comply with international regulations against money laundering and financing terrorism. It has been estimated by the government of Iran in 2015 that dirty money from drug trafficking in Iran amounts to 10 trillion tumans a year, some of which has been finding its way into elections and the securing of votes to influence the country's politics.